I'm using the 15-minute chart now. I have used the 5, the 10, and the 15, and they all seem to do fine. And I've just been testing different ones out, and they've been okay. I can use the 5, 10, or the 15, and the results all seem to be about the same. But when I do switch to a particular one, I try to stick to it for an entire month so I can really test it out and see how much of a difference there is. Okay, so let me go to GE Shipping and the Great Eastern Shipping, and I'm on a 5-minute chart. Please note that what we have is the 20-period moving average, and I have blue, and the 200-period moving average, I have black. All right. A couple of things that I have shared before in previous videos, I want to just reiterate. Remember that the price and the 20-period moving average are like close friends. So the price stays close to the 20-period moving average. Once in a while, it moves away, apart, far apart from the 20-period moving average, but then comes close. Now, it comes close either by the moving average coming lower or by the stock going up higher again. So, for example, here's another one. The 20, the price moved up far away from the 20, but then it came back close to the 20. Moved up away from the 20, came back close. So if the price is moved up like this, I don't want to enter because I know that it's going to come back down. The price is coming back down and coming close to the 20. All right. Let me use another one as an example. TCS. And again, here is the price. Look at that, staying close to the 20. Okay, it moved down away, but then it came close. Moved up away from the 20, came back close, like that. Now, once in a while, I use these to find an entry. I'll show you. If I can find a good one, I can show you. Let me look for some examples of what I intend. All right, IRCTC, I haven't traded that in a while, but yeah, it's so sometimes what I do is when the price goes away from the 20, I may enter expecting it to go back. But the problem here is that the 20 was already moving down. Look at that. And so the trajectory is down. So yes, the price and the 20 comes close together again, but that comes close together just because not because the price goes up very high. Okay, but there are other examples which I cannot find right now. I didn't handpick any of them, and because I wanted all of this to be a natural. Yeah, all right. Let me look at one more. All right. So this is something that I have done previously. Like I find something that goes down like this, and then I check to see the price range and see if I enter here, do I have the possibility of getting 1%? Look at that. There's definitely a possibility of 1% right there. Okay. And these are two factors. One, the price has moved down far away from the 20. That's one. And the RSI is very low. The RSI being low does not mean that the price is going to go up for sure. Okay. But the RSI being down so low indicates that the price may not go down much further. Sometimes it may stay at the same rate, but it may not go down. So here's one that I would enter right here, and the price has gone down right there. I would enter. Now, again, we said that the 20-period moving average is on a downward trajectory. Now, at this point, the moving average is right here, and there's no way to know for sure which way it's going, right? So what I would do is I would draw a trend line just to kind of get an idea. All right, so I have a little bit of idea, even if there's only a little bit of a, what do you call it, history, like only the line may only be this big, okay? And when I enter somewhere on here, the line may only be this long. But then I may use this trend line to show what kind of a trajectory and if I still have enough of a move up. Okay, so that's one type of entry I look for, where the price has moved away from the 20 and it will go back. It's almost like a pulling a rubber band. It's going to go back together again. Okay, so that's one. And the second one is when the price moves away. All right, here's a, let me get rid of this. Okay, the second one is this, where the price, the 20-period moving average is close to the 200 and the 20 is rising. Okay, the 20 is rising above the 200-period moving average. And look at this. The RSI is low. The RSI is low, and the 20 and the 200 are close, and the 20 is on an upward trajectory. That's another good spot for entry. Look at them. These two things are converging together. The 200 and the 20 close to each other, and the 20 on an upward trajectory. At the same time, the RSI is low. Okay, that's the second one. Another one that I look for, and this has become my favorite for the last 2 or 3 months. I've been looking for this a lot. This is where I'm looking for the 200 below the 20. I'm sorry, the other way. The 20 below the 200. Okay, let me find a good example, and then we can move on. Today was a very, I think, a trending day, so these are not easy to find. Okay, here's another one. Okay, so here it is, where the price has gone below and the 200-period moving average has gone below, sorry, the 20-period moving average has gone below the 200. I'm sorry about the confusion there. 20 has gone below the 200. See that? All right, and this is a place, any of these places I would enter, because look at the RSI is also very low. So something like this, I would enter, especially this one right here. The price has gone far away from the 20, and the 20 has gone below the 200. Okay, quite far below the 200, and the RSI is low. So I enter there, and then especially if the 200 is flat, I can look for a move up. Okay, because the trajectory may not be going down, trajectory may be going sideways, especially with the 200, because it is not easy to move the 200-period moving average, because it takes much more of a price movement to get it to move. All right. Okay, so these are some of the entries. All right. Yeah. I think somebody asked about the RSI. Yes, RSI is available in the Zerodha app, and you can use it there as well. Now, the one negative feature that we have is that the trading view no longer allows you to have 3 or 4 indicators together on the free account. You can only have, I think, what is it, 2? And so what I'm recommending is you have the 20 and the 200. That's it. Just keep those 2. All right. And then the RSI, you can have it on your broker, like Zerodha or something else. You can use the RSI there. Okay. Because now in foreign countries, I think, you can have the RSI and the moving averages, everything. You can set it up on your broker's chart, and that would work. But in India, what happens is the apps, the brokerages here, I've used many, more than 10. Zerodha seems to be my favorite, and it seems that Zerodha, you can set the 20 and the 200, but once you close that app, it won't be there anymore. You have to reset it again. So it's more laborious to do that. So the way that you can get around it is to set the 20 and the 200 on the trading view, and then put the the RSI on your Zerodha or any brokerage that you are using. Or you can have TradingView on a different device as a different account. That's one way to get around it. Okay, so I hope you saw the three different entry points. Okay, one is where the 20, the price moves away from the 20 and you're expecting it to go back. Price moves away from the 20 and you're expecting it to move back. The other one is where the price, the 200, the 20 period moving average and the 200 are close to each other, and the 20 is rising. But at that point, I would be looking for an RSI on the bottom, like below, like below 30. That's what I would be looking for. Okay. Now, this one, it wasn't below 30, but it still moved up. Now, that's not very common. Okay. All right. I see some questions. I'm using all three indicators in Zerodha and it didn't get erased. Well, that's great. That's great. That's great. You can check it out and see if that works for you. Wonderful. Okay. And then the exit. Okay. I'm using the 1%. So what I often do now with Zerodha, it's nice. You can set the exit, right when you buy. But in other apps, you don't have that option. So what you can do is you can take this tool and measure 1% like this. Okay, you can measure 1% or approximately 1, and by pressing that, see that you can see the upper price. 365.80 would be the 1% price. If my purchase price is 362.10, then 1% or 1.03% would be 365.80. So I would set that in and set up a GTT. All right. Any other questions? Okay, I'm getting the questions in the good. How many hours do I need in a day, since I'm using a 15-minute chart, from opening of trade to close of day, or an hour or more in a day when you're free? If you're using, Ajish, are you asking how many hours do you spend in a day? Okay, for your trading. Is that what you're asking?
Yeah, because I have regular working hours, so
right.
Maybe I can use maybe the lunchtime or something to do this, or maybe take a break. So that's why I was just
good. So actually, what I'm recommending is that you take your capital and divide it into 3 or 4 or 5. Some entries that are very good and the market is moving in your direction, those entries you may end up selling on the same day. But others you end up selling the next day. So what often happens is in one day, I may trade only, I may take only one trade. In other words, I may buy only one stock and then set the GTT and I'm done. So I may end up only needing about 15 minutes to 20 minutes. Now, I spend a bit more time because I help a lot of people. There's a lot of people on this group and also another group that I help as well. So because of that, I may spend more than 20 to 30 minutes a day on this. But I really believe you only need about 15, 20, 30 minutes a day. That's all you need. Okay? Because not all the trades that you enter, it's going to sell the same day. And then a good time to enter would be at your lunchtime or in the afternoon to find good trades. Why is that? Because during that time, you'll find more of this kind of a position where the 20 is below the 200. It shows up much more. All right. Any other questions? Okay, we have one more.
Yeah, Uncle, I just want to ask one question regarding the RSI. Sure. If we look at the chart of a G shipping.
Yes.
Okay. It's around, the date is 9th November. Okay. So the problem that I see with the RSI is on the level of 747, when the G ship was trading at 747, it was already below the 30. but it even go lower and it came down to 729, and it was lower that time also. So
Okay,
if
November, sorry, when was this?
no, no, uncle, yes, you can continue.
Tell me which November when? Date?
It was 9th November.
Okay, all right, go ahead. Now continue, please repeat.
Yeah, so it was trading at the level of, when it was trading at the level of 755, it was already below the 30. RSI was already below 30.
Yes,
Now it went even lower and it came down to 730, which
right,
is a big difference. So
right,
if I follow the rule and I trade at this level of 755, then I would end up losing the money and the time also, because then I will have to wait more few year the time to come at the
right,
same level.
right. Correct. I agree. So the none of these indicators are 100% accurate. What we are doing is using the moving averages and the RSI together to find higher probability trades. Okay, that's the key, higher probability. Anything is possible. Tomorrow there could be a war, everything can go down, that type of thing. Anything is possible, but what is probable? Probability means, okay, what are the higher chances? So you see this red down here, okay, and the price continuing to go down below that is not very common. It's actually quite rare. Okay, and if you look at the history, you can actually look back at the history, and it's not very common. And so now one of the things that I do is, since I select stocks like this, meaning it's trending on the monthly, weekly, and the daily, which are not easy to find, since I'm selecting only those types of stocks, I'm not putting a stop loss. Okay, now this might seem really bad to some of you as you listen to this. I'm not putting a stop loss. And the reason is because I'm quite confident that the probability is very high on these. Now, does that mean that I won't get stuck with my money down low? Well, yes, I do get stuck. I did get stuck last month. Sometimes for a whole month, it may be down. And I may only be able to trade, just a few. The others may be held down because the price went down 5, 8, or 10%. I've had some that the price went down 15%. I just waited. Sometimes you end up waiting a whole month. Okay, but I'm fine with that. Now, since it is not a day trade, I don't have to exit at the end of the day. I can hold it longer. Now, the chances of that happening and staying down there are quite less. Why do I say that? Because something like GE Shipping, okay, Great Eastern Shipping, well, we have a record of 15 years or more. And the more recent, the moving averages showing that the trend is quite strong. So we're only taking the very strong trending stocks. So because of that, I'm feeling quite confident that I could enter and not be terrified that it's going to finish me off. Okay. Now I could have a few months where things go down. So I'm trading 12 months a year. Out of that, maybe 1 or 2 months, it can go down and then it will come back up again. Okay. So I hope that helps you, Moses. The idea here is that it's gone down, but I'm and this is rare, where it continues to go down. It's not very common. It's rare. Yeah.
And my another question
Sure.
is, like if we see the BHEL, okay,
Which one?
BHEL,
BHEL. Okay.
BHEL, yeah. So if we see that chart, and that chart is is in alignment of like 20, and then 60 and 200 on daily chart and weekly chart, but not on monthly chart. But if I look at those charts, and then those charts are really aligning with the strategies that we were previously using,
Yeah.
like what it was that resistance, support and resistance. Okay.
Sure.
And
Sure.
then the trend lines. So it was aligning with that. So should I trade with that strategy on that, or how should I divide the capital so that I am doing that strategy also and this 1% strategy also, or should I
Okay.
go with the just 1% strategy?
Now, I think you asked two different things. First one, you're saying that this one is not BHEL. Here it is. See, it's not on my selected list right there because it
Yeah.
wasn't trending on the monthly, the weekly, or the daily. So therefore, I did not.
Okay.
I'm not trading that because of that reason. Okay. Now, the second question is this. You were talking about support and resistance, right? Now,
Right.
once it breaks the resistance and goes above, okay? So when you're using a strategy like that, for example, here it is. Here is a point of support right here, okay? This is a point of support. Actually, it's a point of support and resistance, right? And this was a resistance right there, and it got pushed back down again. And then now this time it went through the resistance and continued on its way up, okay? So when it breaks its resistance, that often is a good place to enter, and you can do that, and you can trade that. That is not a problem. Now, I would like to trade even that strategy. Wouldn't it be great if I traded that only on these, where the trend is monthly, weekly, and daily, it's trending really good? Okay, because if
Okay.
anything happens, I'm still safe. I know that it's a good trending stock. So you can, I'm saying you can use the same strategy of support and resistance. You can use it in the, on stocks that are trending on the monthly, weekly, and daily chart as well.
Okay.
Does that make sense? You
Yeah.
can still use that strategy, but you can do it like that.
Okay.
Okay. Sometimes the stocks may go up 1% and then quickly come back down, or it may go up 0.5% and go back down. Okay. So I'm just trying to get this little small swing. Let me just show you the. Okay, here's 1%. Okay, exactly 1% right there. See, there's I'm going to show you all the places where here's the 1% right there, just in the up and down. You can find the 1% move. Now this one here, it's, let me push that aside and show you something else here. You see, yeah, excuse me. Yeah, this one here, see this move up right there? Okay. See, day traders often catch this because they can sit there and watch it and kind of take this entire move. And that move would be, a swing trader, it would be difficult to get that move because you're not really sitting there watching it. Look at that. That's about 6%. Okay. So sometimes people ask, why do you just go with the 1%? Why don't you take, 2%, 5%, all of that? Well, you can set a 2% or 3% or 5% as your target, but it may take quite a long time before it gets there. By the time you get your 2 or 3%, I might have had, several entries of 1%. That's the difference.